doubtful debts. How do we create a provision for doubtful debts, and how do we transfer this to the income statement? So I'll give a background of what provision for doubtful debts are. When we look at provision for doubtful debts, we are looking at just an estimate that a business do regarding debts which the business may not collect from its credit customers. So a business can make an estimate of potential bad debts. These debts are not yet bad, but the business is just trying to take caution and create a certain percentage which in the view of the business, they think they may not be able to collect such debts. So in order to avoid overstating profits, a business will create a provision for doubtful debts. And this is done according to the principle of prudence, which says that profit should not be overstated by anticipating the revenue that may not be received when some of the debts becomes bad. And also it means some current assets may be overstated. So in order to avoid overstating current assets, a business creates a provision for doubtful debts. Now I have this illustration for Wishmore, a trader. His financial year ends on 31 December each year. He provides the following details from his books. Right, so these are the details that we are provided for each year, 2015, 2016, and 2017. So these are trade receivables. These are totals for credit customers at the end of each year. Right, so additional information says Wishmore maintains a provision for doubtful debts at 3% of trade receivables at the end of each year. So 3% of trade receivables at the end of each year, which means we shall calculate 3% of these numbers to see how much will be the provision for doubtful debts each year. Now the question requires us to prepare a provision for doubtful debts account showing the amount transferred to the income statement each year. So that is very important. So the provision for doubtful debts account will show us the amount that has been transferred to the income statement each year. Right, let's see how to do it now. So we go year by year. What we are going to do here is that we'll calculate 3% of this. 3% is the same as 0.03. So here we are multiplying by 0.03. So it gives us, from our calculator, this should give us 165. So we get 165. That's the provision for the first year. Since we are creating it for the first time, this amount is an expense wholly for the year 2015, which means it is transferred to the income statement as an expense. So in order to achieve that, we credit the provision for doubtful debts account and then we debit the income statement. So in 2015, at the end of the year, December 31, we are going to credit this account by showing this transfer to the income statement. And the amount that we are transferring is the full 165 because this is the expense in relation to provision for doubtful debts in 2015 because we are creating for the first time. So on that day again, we balance our account. We know how to balance our accounts. It's just should have what is called a balance carried down this side for the two sides to be equal of the same amount 165. Right, so basically we then put our totals. So this would be our totals, two of them. Right, so our account will be balanced by the same totals, 165. But we don't forget the principles in accounts of bringing down a balance. A balance CD is brought down the other side in 2016, January 1. Right, so it is brought down on the credit side is a balance brought down, and the value here is still 165. Okay, now we are in the year 2016. We also want the 3% for this one. We do the same procedure. We calculate 3% of 6,200. How much does it give us from our calculators? It gives us 186. Right, now the new provision is supposed to be 186, but already we have a provision which is already there of 165. So for us to get to 186, it means we are increasing by a certain amount, which is the same as 186 minus 165. 186 minus 165, this gives us 21. 21 is the amount that we want to get to 186. Remember, this is an increase that is happening. So this increase is the expense that we then transfer to the income statement. The increase is the amount that we transfer because we had a provision already in this account, right, of 165, but we want to go to 186. We are increasing to 186, so we increase by a certain amount of 21, which is the difference between 186 and 165. So basically, at this point we have transferred to the income statement 21, which is the expense in relation to provisions for doubtful debt. So at this level, like we have done on this side, we need to balance our account. Right, for us to be able to do that, we need totals, right? So we need totals. Right. So the totals will be like this: 186 this side and also 186 this side, which means in this column we are putting 186 for the two sides to be equal, and this is happening on the last day of sorry, something went wrong here. All right, so so this is happening on the last day of 2016. And this is described as a balance CD, just like we did in the first record. Because this is an increase in provision, it is an expense. We bring down the balance, this one, to this side, it becomes on 1 January, it becomes a balance PD. of 186 because 186 is the new provision, right, that we have calculated here. So we wanted 186, but to go to 186 we were starting from 165 to 186, so we increased by 21. The 21 increase here is the amount that we transferred to the income statement as an expense. Now at this point, right, at this point now we are starting the year 2017, right? But in 2017, let's see what is 3% of this value. If we check 3% of that one should give us, by calculator it gives us 135. Right, now look at this. 135 is below 186 that we already have in our account. In our account we have 186, but now this time we want to go down to 135. What do we do? Which means we want to decrease this number. So when we are doing a ledger account like this, in order to decrease what is on the credit side, we make opposite entries on the debit side. But now, which entries are we going to make? First of all, we are going to make an entry which decreases, which shows the difference between 186 and 135. So 186 minus 135, from calculator you get 51. Right, good. So 51 is the decrease that we want, and this decrease now is happening in 2017 December 31. But how do we describe this? It's also transferred to the income statement, right? But this time, since it is a decrease, it is actually recorded under other incomes. Soon after gross profit, where you say add other incomes, that's where this value is recorded, because it's more like a gain. We have been over providing. Now because our trade receivables have decreased, here you can see that even the provision has gone down. So the decrease in provision, this is a decrease in provision for doubtful debts. It's actually income to the business. Now we also recorded the new provision. This is the new provision 135, and this new provision is described as a balance because this is what we are carrying to the next financial period, and this is also happening at the end of the year. Right, at this point we then balance our account as usual, like we have been doing. We put the totals. Right, these are our two totals. Okay, fine. Right, we can see that now the two sides are equal because we managed to insert the two figures that are giving us 186. Right, so from here what we are doing is we are bringing down this balance into 2018. So in 2018 we are starting with a balance of January 1. 135, right, which is the new balance in that account. So you can see that the provision for doubtful debts account can show amounts transferred to the income statement. One is expenses, right, and at the same time as income, depending on whether it is an increase in provision or a decrease in provision. So everything that is here was showing us these two transfers were showing us an increase in provision. Here we increased because we started from 0 to 165. Then from 165 we were going to 186, so we increased by 21. But when we reached 186, we then decreased to 135. So we subtracted 51. But the 51 decrease is regarded as income to the business. So this is how we record in the provision for doubtful debts account. I hope this is going to help you to do more practice questions. And don't forget to subscribe for more videos that I'm going to post. Subscribe, just hit the subscription button down there.